Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back for another episode of my podcast. Sorry about last week that I wasn't around because I'm not feeling too well, particularly coughing quite a bit. I haven't got any COVID, but down with a bit of flu. The weather in UK has been up and down. One day is very nice and warm, next day is relatively cold, so I caught a bit of flu on my own. So I apologize. But last week and this last couple weeks basically has been quite volatile. This is what's always happened in my life. I'm sure some of you also feel that too. You know, when you are off to a holiday or you're sick, suddenly watch the market or something, and then the market suddenly do a U-turn on you or sort of thing. So even though I was sick, I was still keeping an eye on things. So that's my part of my discipline. But it always happens when the market just want to do things. Seems to be doing stuff on its own way when you're not watching. So. But market is market. It just do its things. It just happens. It's doing things when I'm not actively on a podcast. That doesn't mean that I don't track the market. But overall, what we see the week before is 22nd of February. That week seen quite a bit of continuation of the market continue moving up. Unfortunately, on Wednesday and Thursday, Friday, this end of February, there's such a big hoo-ha and a big drop of Dow Jones down like 600 points or so. And then last week, on 1st of March, it's more or less recovered it. But unfortunately, it come back down again. So more or less haven't been moving too much up and down. So overall, the last couple of weeks has been quite volatile. Overall, this just to me personally, overall has been watching the market of course as everybody else. But I think that the biggest things for me at the moment is the bond market. There's a lot of talk so far about how the bond yields is gone up to 1.4 and 1.5. I think it reaches 1.6 for the 10 years. And there's a lot of fear about the inflations and so forth. I think overall, I've been watching that TLT, basically TLT ETF, and it's quite telling. I think overall at the moment is a little bit of pause because if you step out, look at the whole bond market thing. It's not really just companies around the world buying and selling things. In the US Treasury bond I'm talking about here. It's mainly driven by international governments, lending money basically. When U.S. Treasury, U.S. government selling its Treasury bonds and other governments around the world sort of buying it. But we're slowly seeing that the decline here is not just, from my point of view, it's not just a company that's pushing it. They are sort of like only catching the wave, so to just free rider, so to speak. The big movement, as far as I'm concerned, are international governments. Mostly, to me at the moment, is China, as well as Japan. And China has been in the last couple of years so slowly moving out of the U.S. Dollar domain of bonds and so forth. And Japan has been buying more U.S. government bonds than China for the last couple of years. But both of them have been, I think, has been slowly slowing down its buying of the bonds. And this mainly, to me, basically, I think is because the pandemic is causing havoc around the world, and U.S. government just, of course, have so many things on its plate and try to save the economy as ever, by pumping more money into any crisis situation, and basically causes international government not very happy, I suppose, on the U.S. dollars continue going down. I mean, by and large, nobody at this stage can replace the U.S. government, U.S. dollar, so to speak, but those bonds basically based on U.S. Dollars, and just because of U.S. dollars itself is going down because of extra money that being pumped into the market. Around the world, internationally, everybody does it, but U.S. seems to have, as usual, pumped a lot more than others, and flooding the market with so many U.S. Government dollars, so to speak, and other governments have to counter it by basically, selling it down. And also, one thing about China is one of the biggest players, of course, and has been very well known over the last 20 years or so, even further than that. they seems to know when to buy and when to sell, and the timing, the accuracy are relatively good. And China has been basically selling into strength when the bond actually went down. The price ran up, and the yield actually went down because so many people was buying the U.S. Treasury bond and stuff, and China has been selling it through and making quite a bit of money out of it. And this time when it's actually, I think it still have a lot more to sell, but I think there is a pause time now coming along. If you look at the TLT graph, I think it's a little bit of pause, but overall I think China still will be selling a lot more of its U.S. Treasury bonds. Mainly, I think this the price has gone up so much that the U.S. Chinese government just want to cash in things, but also the trade war doesn't really help. And on the other hand, then of course people talk about the yield gone up so much, is worry about inflation and things, interest rate going high and so forth. But for me, anyway, I look at it this way: the economy around the world is divided into two at the moment, more of Asian countries and the Western countries. And Asia somehow one way or another seems to have coped with the COVID or disease, this pandemic much better than the West. And it's been coming out from the doghouse, so to speak, especially China. It's the only one that's having a positive GDP last year in 2020. And basically, overall, Asia seems to be, coming out from the lockdown, from whatever restriction they have, in a better shape than in Europe and than in America, than in the westernized world. Is therefore, as far as I'm concerned, is a tale of two cities, so to speak, and the West is basically, is still in the doghouse, and it's just not coming through yet, and probably will later in the year, maybe next year. But that basically that's just the effect of COVID with the vaccination and so forth. There's still a lot of things, the aftermath. Economy is still down, really bad. Those are people losing jobs. A lot of shops are closed. Big shops are closing. Those kind of things. And the U.S. economy, in my view, is not in any way or shape or form to able to sustain the any interest rate increase, any fast interest rate increase or to any particular level. And so that's one thing. On the other hand, is I personally feel inflation is definitely there. It's just not really showing up much, maybe, but it's also there. I think if you go to grocery stores and buy food, and you see the price slowly moving in, moving a bit more up. And also, if you look at the crude oil as well, the crude oil basically is back up to January 2020 time, just before the pandemic, when China basically with the COVID-19 sort of just broke out in Wuhan in China, and it's. At the time, international traveling is there. People still going about, and they think traveling, cruise ships, everything else, and shipments is sending across different countries around the globe, and so forth. And the oil was around 65, 69 area kind of thing. Yes, there is the trade war with China, U.S. and China, but things are still, moving along slowly, but a bit reduced rate because of the trade war, but still moving nicely. Economy is firing on all cylinders, so to speak, and but now we are 1 year later with the pandemic, with the lack of international traveling. Cruise ship are basically more or less gone, and trading or sending things from internationally through goods and services seems to more or less halted. And all this use crude oil one way or another, or its form. Yes, there is traveling within countries themselves, but international traveling is way down. And for oil prices actually come up to this level, basically just showing one thing. Inflation is there because the US dollars is weakening. It's also showing up in grains and corns and those kind of things. Obviously, there is issue there. Of course, not across the board yet. Copper seems to be gone up a bit, but gold and silver gone down quite a lot. But other things, US dollar being all equal to everything else, I think there's definitely inflation coming in, and for US probably a lot more because of the inflation is more important because the US dollars is weakening, and with the $9 trillion coming on its way with Joe Biden get this vote through the U.S. government, then the U.S. dollar is going to go down a bit more. But all this is sort of play in the background. But as far as I'm concerned, the big players need, in my view, space and volumes and time to offload things in any way, shape, or form, or even buy things. So for the TLT actually gone down, ETFs gone down so much for now, to actually continue for it to go down, I think there is. Even though everybody's talking about it, I think that is basically the signal to go the other way around. So watch out the TLT thing. I think the government bonds and the interest rate, the yield of those U.S. Treasury bonds probably will slow down a bit, coming back down a bit. But I think there probably are maybe one or two little hiccups along the way. But I think the yield will come back down. And then basically the bond price gone back up, and then China and Japan and other countries probably will offload things again. So I don't think all this TLT going down is finished yet. I think there's just a little bit pause, but so watch out on that one. And the other thing, obviously, I touched a base about economies in general. It's just not great. Obviously, tale of two halves. Basically, some section of the economy is booming. People work from home, watching online films a lot more, downloading things, Zoom and so forth, can buy and sell things and work at home and using online services or daily charter other online. But the hospitality, hotels, gambling, traveling, international student traveling, cruise ships, those kind of things all gone down the pan. So the economy, in my view, is some sector is definitely making headway. Others seem to gone down to doghouse. And when the COVID vaccinations come into play, probably later in the year, probably see a lot more, more equalized kind of people coming out from the lockdown situations in different various countries, and we'll start, moving around a bit more. But the aftermath and effect comes in probably later in this year or in 2022, and with many like big stores, shopping malls and stuff all shut down or half shut down because a lot of shops just couldn't pay the rent, and the ETFs and the REITs, those people companies that rely on renting out commercial property or rental properties, residential property to others, probably will get a big hit because a lot of people got unable to work, shops closing, and not have any money to pay things and so forth. So those things will affect the banks and so forth. But we just have to wait and see what happens in basically in the next 6 months to 9 months kind of thing. But I think overall the banks will suffer on that one. However, I think it's at the moment it's popped up just like every time when the issue I said earlier in the U.S. economy, the U.S. government always just put more money in there. And this time, just like back in 2007, 2008, it's not just one country that actually pumping all the money in. It's around the world. This time, of course, it's a lot more heavier, a lot more from the U.S. than anybody else. But I think this base pumping of money, the U.S. dollars have to go somewhere and has to go into somewhere that it can make some sort of return when the government bonds initially paying 0.5% or even less than that for the 10 years treasuries, and now the yield have gone back up again. So probably some of those money will go into the U.S. bond market or the bond market in general. We just have to wait and see. But also it drives everything onto the stock market. So as far as I'm concerned, the stock market is reflecting what's happening in the real world, in the real economy. And like Warren Buffett said, sooner or later, the stock market will reflect what is actually on the streets. And I think this is not reflective yet. And when this reality strikes, the stock market sort of reset, I think there will be quite a bit of volatility. And at this moment, with Dow Jones still like above 30,000, it's relatively high, and a lot of countries, Japan and Hong Kong and so forth, still very high on the stock market. I think there is basically shock that definitely in the pipeline can cause a bit of a wake up call to around the world. So it's gonna be great. Just like last year with the trend all over the place, going down. As well as coming back up, initial first half or first quarter, March, April, everybody suffers quite a lot, but trend following has been great. And then the final recovery from April until early this year, I still think the recovery is still there, but I think it's a bit more choppy, trying to find its next phase, will go up or go down. But trend is actually there, and now it's more trend coming through. Basically in the bond market going down, and the Chinese dollars is continue sort of strengthening. I've got to be sideways at the moment, but I think there's still more strength to go yet, and so forth. And of course, Tesla and so forth last year was great, and this really led me to another thing. For the last month or so, when you see GameStop and Elon Musk from Tesla basically tweets about how can the company being short so much, and obviously the GameStop tobacco, a lot of people make lots of money, lots of people make a lot of money as well. And then it got on to silver, a bit of squeeze, so to speak. But obviously the market is much bigger than GameStop itself, and that's gone a bit quiet down now. And then people obviously thought this person, Kathy Woods, or someone like a trading goddess, and much better than Warren Buffett and so kind of thing. And everybody's holding her because last year some of her holdings on Tesla make quite a lot of money. Of course, going up 700% or something. So she's like queen of the media, financial media in America at the moment. And whatever she said seems to a lot of people listening. But I think from my research, I found that a lot of people also circling on ARK itself, Kathy Wood's funds, because Kathy was very open, talking about what she's doing and so forth. I think a lot of people, maybe some bigger shack lurking behind the scene, is licking the lips to say, do something similar to the ETFs like oil happened back in March and April time. Lots of people lost loads of money in the oil ETF last year when the oil price got negative. I think when the economy start, coming back out again, people coming to back on the street shopping, yes, a bit lower level, and people probably with the pent-up demand coming shopping overall. I think that the street of on the street shop will be opening. There's definitely going to be economy, increase activities and so forth, but probably subdue a bit. But that will definitely bring a bit of steam out of the technology sector, which ARK investment heavily into in a couple of ETFs and so forth. And already showing when I was not feeling too well last week is basically I think around 22nd or so, February, end of February, early March, all of the things have all these ETF have more or less gone down. So is Nasdaq gone down quite a bit as well. It shows that how volatile it can be or vulnerable it is. With ARK, something to watch out is quite heavily involved into the technology sector. If Nasdaq actually gone down, I think a lot of those ETFs, ARK ETFs, will just going down the pan. So watch out on those things. And I think big shacks in the background probably do something similar to what happened to GameStop, playing some tricks to drive the price up and then drive it back down again. I think to the big volatility make them loads of money. And I think just what I researched and what my understanding is, some people or big sharks are looking at ARK. It could be totally just bananas, but people in Asia is actually talking about it quite a lot apparently, and so you just need to watch out on that one. And of course, gold last couple of weeks broke 1700 marks, gone down and down, and everybody's saying, should we go even further down? On its face, I think overall it might. The trend is continue coming down, but who knows, with US dollars being weak, and there's another 1.9 trillion coming through. I think sooner or later, when the market reset, gold will shine again, but we just have to wait and see. But it's a trend following. I've been warning in the last month or two or so, when the gold price actually changed, the system actually changed sides. So the system actually say go the other way and go shorting, and that's why I said before, go continue just following your system and short the hell out of gold. And just watch your system, even though, yes, I am biased about because of US dollars and then weakening, and I think gold and silver will definitely displace, but looks like the market is doing its different thing. I might ultimately be proved to be correct, but at the moment, gold and silver price is going down the pan, so just continue to short those things, just watch out. So it's Bitcoin in a way, and Bitcoin over the last couple of weeks have been topping 58,000 marks, and then I'll come back down to down to 46,000 marks, and then I'll recover a bit back to 50,000. You can see how volatile the thing is. We just have to wait and see. Remember, when tides comes in, everybody floats, and when tides goes out, everybody will come back down again. So Bitcoin probably will suffer its fate, coming down and going up just as the market goes and do its thing. So just watch out. Bitcoin is very volatile. I mean, you can up and down within a week or two. 10,000 is quite heavy, quite a lot. So just be careful on that one. Don't get bruised and kicked. And generally, I think overall, the last couple of weeks has been, a bit of showing a bit of the market is turning a little last couple of weeks, but we just have to wait and see. But overall, I think my biggest project this year, probably next couple of years as well, is basically looking into China and how the trade war is happening, how the China with its growing middle class, so it's in lesser extent India as well, how the Asia countries is going to take back the lead, so to speak, from the West, when America seems to dominate everything for the last 100 years or so, and before that was Britain and so forth in Europe. I think the next 100, maybe 200 years is back into the Asia time. So overall, I think this transition probably will coming in slowly, and China definitely is going to challenge the number one spot economics wise, US spot, and just like what US have challenged Britain before. When the transition happens, it's going to be quite a bit of hoo-ha. It always happens, and I hope it will never happen, any actual war kind of thing, but trade war, financial wars, and wars of the words definitely already happened, and we just continue. So I think, following the next, 10, 20, 30 years, even when I'm 6 foot under, this transition will be continuing. I think it's something that's great to watch out for. I think Ray Dalio will have a book coming out soon, shortly about this sort of transition sometime soon. I'll definitely get onto that. And I think with interest, I'm just eagerly waiting for that, and then do my own research and find out what is a better way to trade. Because overall, for me anyway, for my pension trading and so forth, I always have a bigger emphasis on this one in Asia now than staying back in UK or US. I think the next big thing really is China, and has been for some time, but I think even accelerating more because of the pandemic actually really show how it doesn't matter if you like the way China is governed or not, you agree with communism or not, the end result is China emerged quicker than the rest of the world. Doesn't matter what you think, where the virus actually come from or not, whatever. It just look at it in plain daylight, and the West is not handling itself well at all. Maybe just its own, the way people works there, and in histories, the freedom of movement, that kind of thing. In Asia, a bit more lockdown, a bit more control, especially in China. And the control way seems to have helped the pandemic, control of the virus, running around in Asia, than in the West, and that sort of affect the economy. That basically fastened the challenge between China challenging US number one spot, because as US is still recovering, China seems to be coming back out from the doghouse due to the pandemic, and with U.S. economy sluggish or gone down a bit. We just give China even shorter time to take over economics-wise, and become taking over number one spot. And I don't think America is going to like it. Like, I'm talking about American government in transition period. There's always a bit of hiccups and push around and wars, and I think it's going to be quite volatile going forward. But we just wait and see overall. But that's definitely some a big research project for me. I think it's quite useful to actually look at. Without further ado, let's look at my sample portfolio coming up. Okay, first off the bat is Apple. Since I haven't on the podcast to give you an update last week, so I'm just going to say what I found for this week. But however, last week there is quite a bit of changes. Probably have noticed of the Dow Jones and Nasdaq indices seems to have all gone the other way. I think it might have make a temporary top. We'll see how it goes, and therefore last week was quite a bit of change. So this week, basically for Apple, is affected. Short term is a sell now. Medium term is neutral as well. Long term is neutral. Next is Amazon. Again, it's been changed last week, I think, to sell for short term. Medium, long term is also changed to sell this week as well. So even though the week before the index, Nasdaq index and Dow Jones went down, and last week came back up to recover a bit, but it's still down like a couple hundred points the last 2 weeks. So Apple and Amazon is showing those sell signals, and Apple especially have been on the sales for like about a month already, and just continue. Next is Australian dollars against US dollars. Short term is a sell, medium term is neutral, long term is a mutual. US dollar index for the past week or so have recovered somewhat, back up to 91.5, I think. I believe it's 91.7 or 8, that area. So it may go as high as 92 something, 92.4 or 90.5. That's where it was last time, about 3-4 months back or something in that area. But it's still the same thing. The US dollars, it's got to weaken until it's a temporary bounce possibly. But what we basically don't know is this bounce going to continue? The things I see is the 1.9 trillion stimulus package coming out from America. The worse it will make the American dollars going down. I think this past weekend or next week the U.S. government, the houses and so forth, tries to pass that bill, and then if it actually happens sometime in March or in May or April, then we'll see a lot more of slowly U.S. dollar weakening. By the time, in the moment, it seems to have strengthened a bit, so we just have to wait and see. Brent crude and the British Brent crude and then the US WTI crude oil, for both of them is the buying spree is continuing. It's just short term, medium term, long term is still buy. It's very slow, but it's making a headway, and we obviously have a recently very cold snap in America, and then I think last weekend the OPEC's team basically said they're not do anything with the output, so this sort of drives the crude oil. I mean, these are the current level, and they've gone up a little bit. I think about $2 or something over last Thursday or Friday. So it's still there. This one got legs. I was thinking more next year or later half this year that this too will shoot up a bit more, but this slow, smooth rise has been up more or less since March, April last year. End of April, and it's just slowly continuing. Next is DAX. Short term is a buy, medium term is neutral, long term is a buy. So the effect the last couple of weeks on the US side haven't really touches the European market yet, but we see how it goes. Next is Dow Jones. Like I said earlier, last couple of weeks causes some short-term selling. So short-term is a sell for Dow Jones, medium term is neutral, long-term is still a buy. So it's still up there. It seems to affect the Nasdaq a bit more, which I'll come to in a minute. But for Dow Jones, seems okay. For FTSE, short-term is gone to buy, and last week I think I've gone down to sell and then come back down to buy now, and neutral for medium and long term is also a buy. So I mean, in UK we have obviously the oil companies a lot more heavy in the FTSE 100 in UK. So the continued gain of the crude oil and Brent crude is definitely helping the FTSE 100. But it's more or less like a sideways trade. It's just going up and down all the time. So we just have to wait and see. Next is gold. Short-term, medium-term, long-term is all sell. That has been the case for past month already. It's more or less just sales, and obviously the total system too is on a sale since last week while I was off air, and continue to sell this week. So it's broke the 1700 mark for gold, and I think it gone down as low as 1688 or 1680 area. If you look back like a year or so ago, the 1650, 1680 or 1650, 1700 is around the last group of support or sideways trade zone anyway. So probably we'll get some sort of support around the area, but we'll see how it goes overall. Next is Hang Seng Index in Hong Kong. Short term is a sell. It basically got a cue from the Dow Jones from America, and so short term is going to change at least last week and continue this week into sell. Medium term, long term still a buy. We just have to wait and see. Nasdaq, which I said earlier, has quite a bit of volatility last week, and this just a week has gone past. Basically, short term is a sell, medium and long term is neutral. So these are things about what I said about Nasdaq and ARK. Investment ETFs by Kathy Woods. A lot of her selections on all the ETFs are very too much technology heavy. So yes, the Nasdaq's really trumping it, and basically showing quite a bit of loss for ARK. So whoever have been actually on ARK lately probably got a bit burned with I think about 20% down since middle of February. It's quite a lot of changes. So so this is why you say you must have a system, and system say turn it down, which trend following system do. Just get held out. Doesn't matter how fantastic this magnetic personality you might think she is. She might be the goddess of 2020 because of basically Elon Musk, Tesla, and she got on right side of the trade. Tesla may have gone the roofs gone to the moon, gone through the roof, so to speak. But doesn't mean that it can continue. So when the system say go the other way, it doesn't matter how you think. If it's a true trend following system, we've seen the price fluctuates quite a bit. We have told you to get out of it about a couple of weeks ago, and so you should have gone out that way rather than waiting for some guru tell you when to get out. Trust your own system. And Nasdaq's already tell you the queue as well. So watching Nasdaq is basically I think it's somewhat of a leading indicator for me anyway. Because when the market recovers from March, April last year, Nasdaq seems to have jumped out, and I think this time as well, Nasdaq was also the one that lead the way down. I think even if the economy, people coming back out from lockdown, businesses starting to come back up on stream, not in mass, but some of them survive, will open the doors. And that means people will still likely to work remotely from home, but a lot of them will be watching less of films, Netflix and stuff, or go on to eBay or those kind of things, or Amazon, much. Probably do it in the evening rather than being locked home all day and then buy things online and so forth. So I think that will be definitely have some sort of effect on it. So just have to watch Nasdaq. Next is Nikkei, similar to American Dow Jones. Short term is a change to sell, medium long term still a buy. Silver is just following the big brother of gold. Short term is a sell, but like I said before, gold is not as bad. Silver is not as bad as gold in the sense that medium and long term still neutral. So it just stay there at the moment. We'll see how it goes. But silver being always lacking behind on gold movement, upward movement, but again it's lacking behind when it's downward movement as well. So all to its own. So silver seems to be more stable out of the two metals. Next is US dollar against Chinese yuan. the Chinese dollar. Short term is a buy, and medium term and long term is neutral. So this has been sort of changed after the last 2-3 weeks or so, as the US dollar index strengthened. And as I mentioned it before, about a month or so ago, about in the MACD histogram, we see a what you call bullish divergence as a price actually continue to go down a little bit, not much, but continue to go down, but the histogram in the MACD seems to have gone up. That's just the normal MACD. So it seems to be doing the trick at the moment and showing us now, short-term wise, US dollars be strengthened, but I don't think we've gone up too much. We just have to wait and see, because the Chinese dollar is actually what you have been, the economy coming back up and everything else. I mean, a lot more people will go and invest in China than in America overall, because that's where the next, as far as I'm concerned, the next 50 to 100 years, probably into India as well. That's why the Senex, I believe, has been going up quite well in 2020 as well. So don't ignore the Indian market. And as far as I'm concerned, the Chinese market is ready to go, and the strength of Chinese dollar is only temporary weakened against US dollar, but against against all the other type of major currencies seems to have gone sideways. Only the American dollar against American dollars has strengthened a lot. So it just show about the trade between the two countries. So just watch this, okay? Next is US dollar against Japanese yen. Short term, medium term, and long term is all a buy, and basically Japanese yen has been weakening quite a bit last 3 weeks or so, and it's now gone back above 108. You might have even continue to go to 109 or even 110. We just wait and see, but there was people saying, remember in the old days when the US stock market tanked, then the Japanese yen, basically people jump into Japanese yen, and so it's gold. But it looks totally different, when people suppose fight running away from danger, fight for quality and stuff. Normally the investor go to gold and go to the bond market and go to Japanese yen. And unfortunately, those seems to be happening that way now, isn't it? Those paradigms shift. And so when the Dow Jones actually tanked the last couple of weeks, Japanese yen continued to weaken. So I wonder where the money going. Going to Bitcoin, but Bitcoin have stop around 58,000 and just come back up and down there about around 50k area. Gold definitely is not holding up. Even though when the Dow Jones gone down, still going there. I think overall there's something else big happening. I think overall could be quite a bit of people may have got the U.S. Treasury bonds, continue the price going down. A lot of people may be betting on it to stay high because the government basically just keep on buying, the U.S. government can buy us buying their own treasury bonds, printing loads more money and release money that way, buying its own treasury bond. But I think there's a lot of other countries, I said earlier in my early podcast, selling it, and causes quite a bit of people could have been, forced selling, that kind of thing. So this is what you see across the board, like back in March, April last year, when the market really tanks, everything seems to be dumped. So something somewhere probably got forced selling going on, and all the things that's liquid have just been sold to cover their margin call, so to speak, or something. So I think something similar thing might have happened. Otherwise, you won't see everything seems to like gone the other way. Basically the market is telling you something. But as far as you're concerned, you and I are concerned with trend followers. What the trend followers do, we don't care about what the market says except the price. So the price basically says Japanese yen has been weakening, so we just basically sell. Shorting a Japanese yen, that means US dollar against Japanese yen is a buy across the board. Okay. Next is British pound against Japanese yen. Similar to US dollar against Japanese yen, is buy across the board, short term, medium, and long term. But because of the strength of US dollar lately, finally sort of comes in a little bit reaction against British pounds. Short term is now a sell. So it was gone up to like 140, almost 141, or 1.41. But now it's gone back down to 139 or something like that. So we just have to wait and see. So short term is a sell. US dollar strengthened, British pounds weaken against US dollar a little bit, but long term, medium term still a buy. Next is Bitcoin. I said earlier, Bitcoin seems to have moved around the last week or two. It's gone up to 50, just about 57, around 58,000, and then went back down within a week or so to 46,000, and now last few days in the last week, it's gone back up to about 50K at the moment, I think. You can see how fast, how great range it has. It's very, very volatile. So we just have to wait and see how things are. So I don't know how much people actually use the Bitcoin thing for in general use. Like, I mean, this is the thing about what I said about Elon Musk, ARK, and Bitcoin thing. Elon Musk moaned a bit about GameStop through Twitter, and then Elon Musk also said, okay, we have bought, or through Tesla, have bought 1.5 billion dollars worth of Bitcoins. And that forces the Bitcoin to go up as well. A lot of people jumped in. But I just wonder who is the others actually selling all the Bitcoin to all those people, and who's been buying, and they lost quite a bit of money, I suppose, 58,000, and then jump back down to 46, it's like 10, 12,000 mark movement. Yes, now maybe around 50K, still, 8,000 below from its top. Somebody probably nursing some sort of pain over there. And the other thing is, Tesla is only through Elon Musk only saying they're thinking about using Bitcoin to buy, so you're allowed to buy their cars. Will it actually happen, or they say yes, you're thinking about it, it might happen. We could be allow you to buy cars with Bitcoins, but even just a little hint of move to Bitcoin, going up like this. I feel personally, a bit of a con. Bitcoin is could be, in my view, could be used, being manipulated, especially this time gone. Last time when it gone up to like 19,000 or something high last time. This time gone much, much higher, and this time is mainly driven by a lot of what you call institutional investors, that kind of thing. And so just watch out, those big sharks have very much have the money and the will, the connection to move things around, and try to make you feel that everything is hunky-dory, looking so great, and the Bitcoin will not lose anything. But that could be a trick. So always follow the system. So for the time being, your trend following system. If you follow my podcast, it will tell you that basically short term is a sell at the moment because of the latest volatility. But long term, medium term still buy, but watch out Bitcoin. Next is, I said earlier, the iShares 20 TLT ETF, tracking the long dated US bonds. It sell across the board, medium, short term, long term is a sell. I mean, recently, for the TLT, short term has been changed to buy, but I think last week for some reason it gone back down again. So just basically how I think this is at the bottom, near the bottom in my view. It's just trying to find all these fluctuation volatilities went up and down. It's the way the market telling us that it's trying to find either move up or down, continue to go down or something. So bottom may be near, I don't know. We just have to wait and see. But I think like I said earlier, when people have to move big amount of money from any stocks or in this case government bonds, the big player, the China, Japan and so forth, needs time, and they just dump everything on the market. They just drive the price to very, very low, which is not good things to do. And people are not stupid, so what they do most likely is just the market's always been doing. They sell the share for a little while and then give some pause a bit. Have some one way or another help the news to come out be better. Then people power back in, and then when the bond actually prices increases, and therefore the yield reduces back to maybe below 1% or something, then the big bond might come back out again. That kind of thing. You might do it 2-3 times before actually allowed the big boys sort of out of the market, so to speak. But governments across the board always buy each other's bonds, so they probably find some natural level to settle on. But I think at the moment China is still quite heavily selling the US bonds, so TLT probably ETF have a way to go yet. There might be some sort of reaction. We just have to wait and see. Next is Tesla. Short term is a sell, medium term is a sell, long term is still and neutral. This is very much, Tesla is a reflection of Nasdaq. I just wonder how much Kathy Wood have lost on Tesla. She made loads of money last year, but it's gone down quite a bit for the past month or so, probably about the last 3 weeks. I think more than 20% or something. It's quite a bit. So just have to wait and see. Next is Australian index. Short term is a sell, medium long term is neutral. So Australians sort of like go fluctuating, that index is up and down. So just have to wait and see how it goes. Last but not least is Alibaba. Short term is a sell, medium term is neutral, long term is a sell. And that is basically it. Alibaba has gone down quite a bit, just like any Nasdaq shares. We just have to wait and see how things goes. But as far as I'm concerned, this last couple of weeks got a bit volatile. I think maybe we play off last year, who knows? But last year we got a pandemic disease coming out from China and spread around the world. This year, what do we have? It's more like a recovery play, isn't it? People talking about vaccine, and I've said it before, I'll say it again, the vaccine may be coming out around the world, but a couple of things haven't actually been much have been mentioned. First of all, obviously, is like the protective gear of mask and so forth. When everybody was scrambling for protective gear and mask, some country in America stopping other countries, to purchase or buying mask for and hold it up for their own use. So lately, AstraZeneca, I believe, some of the vaccine in Europe supposed to send to Australia got stopped because the US, the EU, the government EU basically think, AstraZeneca didn't hold up to his bargain, didn't give them enough vaccines, dosage and so forth, and stopped this shipment into Australia. So you can see that, the vaccines, first of all, it's not enough to share around, and everybody, is fighting for get a full dose of vaccine. But not many people talk about the poor country. Does anybody talk about South Africa, for example, or African countries not getting the dosage? Let's say Philippines or Latin America. There's a lot of discrepancy here. The richer nation, the powerful nation, able to get on to this vaccine. The one lesser countries are, at the back of the queue waiting for people to do some charity. So, therefore, on that front, the virus will still be around for some time, as far as I'm concerned. Next is there's so many vaccination going around. There's still no such a thing as like a common acknowledgement of the vaccination to say if you have certain vaccination done within certain time, and you go around traveling internationally, you're allowed to to go into this different country to. This basically helped the air travel industry. None of that have happened yet, and a lot of it is driven by politics. It's like will U.S. trust the vaccines from China or trust the vaccine from Russia, and like vice versa? And how about Australia? Who would they trust? And Latin America. And that until they got a common understanding, this is where who's supposed to step up. I'm quite surprised they never come out and say, okay, this vaccine seems to be okay, and therefore should come up with some sort of like a passport or something. If you like I said, if you are vaccinated within last, let's say, 2 months or 3 months using one of this knowledge approved vaccine, and then you're allowed to drive around or go around the countries or international travel. But nobody seems to putting anything up. And last but not least, but all this, remember, this vaccine has been rushed out very, very quickly, and all the sample size testing, whatever, is still relatively small. Now, yes, it's being rolled out around the world, probably on all different conditions, different age group, different races and so forth. You probably see a lot more active data coming back out in the next 6 months or so, and people might not necessarily get, maybe put the hopes too high. Some of the side effect might be slowly coming out, and then more people, some people will get rashes like in UK. Other people might have, injections in Sweden. Suddenly, some of the old people just die. It's not talked much about on internet or on any news. But as far as I'm concerned, there's pros and cons for each of the vaccines. I'm not for or against each vaccination or something, but I just the way I'm weary and conscious of the way that the vaccines be rolled out around the world, the lack of it for the poorer countries, and also who the side effects hasn't been well known, that so to speak, and who knows what happened when most people, let's say a third or a quarter of people around the world has been vaccinated, probably see better more of the side effect shows up. Would that really as what people hope for? And also if a vaccination, will people just still come out and shopping right away like in US? The stock market is basically thinking, or more or less showing you, with the vaccination here, the stock market is saying everything should be okay. The stock market is higher in US than what happened before January in 2020. There's day about was about 29,500. Now you're like about 30, just about 30,000. So essentially, if you look at the Dow Jones, it basically tells you everything is fine. But I don't believe it. That the economy, the real economy, the Main Street has been hurt quite a lot. That's not just US but around the world, and for the stock market basically gone up so high that there will be reset, but I don't know when. But we'll see how it goes. But I think it's going to be quite volatile for the next couple of months or so forth. We just have to wait and see how everything goes out. But always remember, stick with your system. Your system tells you to change, then change. Don't have biases. My goal position is very much the one to as a good example. So I may have biases, but goal basically going down. And what I have to do, change it on a dime, follow systems and sell. I'm still think gold will be good later on, but the market's telling me otherwise. So all I have to do is follow gold, follow the downside. If it's short the dough, short silver, and see how it goes until the market it's changed. Then my system tells me to go the other way or sign aside. This is what I need to do. Basically, that's trend following 101. Okay, guys, I will speak to you next week and hope to speak to you soon. Bye for now.